Jai Hind and Namaste. Welcome back to the Capital Current. I'm your host, Chidananda, and today we're diving deep into one of the most groundbreaking financial stories of the year. The BRICS-backed New Development Bank, NDB, is preparing to issue its first ever Indian Rupee-denominated bonds, a move that could dramatically reshape the future of global finance and place the Indian rupee on a new international pedestal. What does this mean for India? How does it challenge the dominance of the US dollar? And why are global powers, especially the United States, watching this very closely? This announcement from the New Development Bank is being seen as a historic moment. How significant is it? Yes, this is indeed a major step. The NDB has started the process to issue rupee-denominated bonds by March 2026. Here's why it matters. Once international institutions or corporations begin issuing bonds in Indian rupees, the demand for the rupee globally increases. That means it will start being used more widely, not just in trade and settlements, but also in financing and investments. This marks the next phase in the internationalization of the rupee, a process that actually began back in July 2023, when the RBI allowed invoicing of foreign trade directly in rupees. Since then, India has opened Vostro and Nostro accounts and is already trading in local currencies with 30 to 40 countries. Adding rupee-denominated bonds is the next logical step, completing the financial ecosystem. So this isn't just about bonds, it's about building a whole new economic structure? Exactly. Once countries start borrowing and lending in rupees, India reduces its dependency on the dollar. Remember, the BRICS group, Brazil, Russia, India, China, South Africa, along with new members like Egypt, Ethiopia, Iran, and the UAE, is growing stronger. If infrastructure loans within this group are issued in rupees, it's a massive shift away from the dollar system. This is particularly important because the US often uses the dollar's dominance as a tool of political pressure, from sanctions to revoking waivers, such as the recent case with India's Chabahar port operations. We've seen how the US confiscated $300 billion of Russia's foreign reserves, as well as assets from Venezuela, Iran, and Afghanistan, simply because these were held in US-denominated instruments. Sounds like we're building a full-fledged rupee-based global ecosystem. But can the rupee really challenge the dollar? It won't happen overnight, but the trajectory is clear. India's economy is already $4.2 trillion, growing at around 7% annually. In just a year, it will add $300 billion more. As our economy expands, so will the rupee's role. Already, share of India's cross-border payments made in dollars has dropped from 90% to around 70 to 72%. We now trade $75 billion worth of goods with Russia in rupees. What about investor safety? Even oil trade with countries like Saudi Arabia and the UAE who guarantees is increasingly rupee-based. Investor confidence is based not just on ratings, but on fundamentals, fiscal discipline, debt-to-GDP ratio, and overall economic strength. India's debt-to-GDP ratio is around 81%, much lower than the US, 126%, or Japan, 252%. This makes India's bonds attractive. Moreover, rupee bonds allow India to raise long-term funds at competitive rates without relying on the dollar. Investors trust the potential of India's economy, and many, like Russia, are already reinvesting their rupee reserves into Indian companies and projects. But won't the West push back harder as this trend continues? They already are. The US doesn't want India trading oil with Russia in rupees or expanding UPI globally. Under the Trump administration especially, every Indian move is being closely watched. Countries like Mauritius and Maldives now want to trade in rupees, and India is starting to offer aid in rupees instead of dollars. If the rupee gains too much traction, demand for dollars could fall, leading to inflation and rising bond yields in the US. So yes, there will be diplomatic and economic backlash. But in the long run, the economic benefits of trade, investment, and financial independence will outweigh sanctions or pressure. Will this money benefit only mega projects, or will it reach smaller cities and local development too? It will reach everywhere. Imagine the Noida Municipal Corporation issuing rupee bonds abroad to fund infrastructure. That's entirely possible. A vibrant rupee bond market will fund everything from large national projects to local urban development, all at sustainable rates. And as more cities and states use this instrument, the bond market will grow larger than GDP itself, just like in major economies. Finally, do you think the 2026 target is realistic? And will the process remain transparent? Yes. Bond issuance always involves detailed prospectus, outlining how funds will be used, project timelines, and expected returns. Transparency is key to attracting investors. So far, only China and South Africa, among BRICS, have issued local currency bonds. India will be the third, and this will mark a major milestone in the rupee's global journey. So, in conclusion, this isn't just a financial move. It's a strategic step toward de-dollarization and a giant leap for the Indian rupee on the global stage. From trade invoicing and UPI expansion to rupee bonds and cross-border payments, India is quietly but powerfully building an alternative to the dollar-dominated system. And while the road ahead might bring diplomatic challenges, the direction is clear. The rupee is rising, and the world is watching. And thank you all for watching. Don't forget to like, share, and subscribe for more deep dive analysis on global finance and India's changing role in the world. Jai Hind, Jai Bharat.